Long time no see, Lemonade investors. I've not uploaded a video about Lemonade in about a month since they reported earnings, even though the stock gone up a lot since then. Hello everyone, welcome back to the channel. Today we are going to talk about Lemonade stock, why it has gone up that much in the last month, what I think about this investment, and many important things to say about my positions. If you're new to my channel, please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which the link for that is down in the description below. This stock has been a roller coaster for me since I started investing in it, and I actually like it. I know the volatility risk and the risk of investing in this company, and that is why I have told you guys before that I don't care about short-term moves. So the company went public last year at $50 per share, and as you can see, the stock went up to $96 per share on July last year, a few days after going public, and then went down back to $43 per share and started bouncing and bouncing and bouncing in between these two lines, these two levels. And then finally, between November 24th and December, the stock broke that level of $65 per share and started going up and up and up and up until January 2020 that it got to $188 per share. Then after that happened, short sellers started talking. There were a lot of articles around this company of how the valuation was really reached. Then earnings came and the stock started dropping, then bounced and bounced and dropped really hard to $80 per share and tried to go back up, but then started bouncing again at $80, and then finally on May this year it went down to $50 per share until May 13th when the stock started going up and up and up like crazy. Between this time there were Q4 earnings and Q1 earnings, and short sellers talking about the stock, which in my opinion, those earnings were excellent. They saw excellent growth in members and revenue. There is something I'm going to talk later about their revenue because it seems like it is dropping, but it's actually not dropping at all. But yes, the stock is finally going up. Today is down, as you can see here. It's red, but it's finally recovering. Let's see if it can continues or at least stayed flat and then with time continue going up. But what has happened with Lemonade? Well, first of all, growth stocks were on a huge downturn, and tech stocks were selling off as well because of price that have skyrocketed, inflation fear, and many things going around the US economy that the market has been very weird this year. Still, Lemonade started to drop because of short sellers, bear statements, and finally their Q1 earnings. After that, the stock tanked. Why? Well, if you see their earnings, it seems like their sales decreased over 10% year over year in Q1. Many articles were published talking about this, trying to make it seem like the company is failing or want to confuse us retail investors believe that their sales are decreasing, but the truth is that their sales and members have actually increased year over year. Their in-force premium grew 89%. Their customers have grown 50% since Q1 2020. The thing is that Lemonade signed a deal with range shooters in Q3 2020, in which now they cede 75% of its premium and losses to the range shooters, and that is why they explain that we cannot compare the company's earnings results with the previous years quite yet, as the deal started in Q3 2020, so we might be able to compare it for Q4 2021 and so on. Then the stock started going up for no specific reason, to be honest. There is no specific news around the stock other than it was being shorted a lot and that it was one of the most beaten down stocks. But people might have noticed once again the potential that the company had, or they all wanted it to drop to the 60s or below to buy more, who knows. What I do know is that they released their new product, car insurance, which is a huge deal for them as it is a much bigger market. It's 70 times the size of the renters market, 80 times pet insurance market, and 3 times the homeowners market, which is a game changer for Lemonade as it is a $100 billion market opportunity, which could easily help them seeing an exponential growth for the coming years. In my opinion, Lemonade is still in its fancy, and that is why I was not expecting much movement, to be honest, but they have shown their potential by expanding massively and quickly in less than a year throughout the whole 50 states of the United States and internationally. But I do want to explain something very important here, guys. I know I have said a lot before that I'm a long-term investor and no financial advisor and try not to care about short-term movement. And yes, a 67% drop was a short-term movement or event, as it happened in less than 3 to 4 months. Not because it dropped 67%, it's a long-term movement, not only 10%. Is a short-term movement. Medium to long-term investing for me is 3 to 5 to 10 years holding a stock. I have not been investing in this company for a single year yet, as I started investing in July or August. I'm saying this because I have read many comments in my videos saying, and I'm just going to show you some of them so you could understand. And just like I said to that person, I like the long-term potential in this company. Lemonade was not the only growth stock that was dropping, and I was seeing that drop as an opportunity in case I wanted to buy more. I think this type of comments are funny because I literally say on my videos I'm investing in this company long-term, or that I understand many don't like this kind of stocks as they are very volatile stocks and are not for everyone. It's also funny that those comments appear only when stocks are down, which means that many people might be investing in these companies just because of what people say on YouTube, which is not the right thing to do, or I really don't know. But with this, I'm not saying I don't like those comments. I like to see what people think about the companies that I'm investing, but I don't want any of you investing in a company just because I invested in or because I posted a video with my due diligence, as I'm not your financial advisor yet. I'm saying this because it is not only with Lemonade, it also with Wish, Fubo, or any other YouTubers. I've seen it in other channels as well. The three of those stocks that I mentioned are very volatile stocks, and if you are not able to hold it long term and see the potential in the company long term and afford a 30 to 50% drop to buy more or just hold it for the long term, because of what the company is and what you see in the company, then this might not be the best investment for you, as it will be very stressful. And I don't recommend anyone investing in something that stresses them out, as it is not fun at all, and you should have fun or enjoy your investment at least. That is why I try not to get into meme stocks or penny stocks or day trade, since that is very risky and stressful and could make me lose a lot of money really quick. Because believe me, I've been there. I used to day trade options, and even though I know many people are making money day trading options and do a living of that, I learned the hard way that was not for me, as it was really stressful and made me lose money as I involved my emotions with investing. Long-term investing in growth stocks is the move for me, but might not be for everyone, and there is nothing wrong with it. I'm just saying this because it is risky to invest in this type of companies, but I'm willing to invest in these companies because I like the potential. Why am I investing in Lemonade? Easy. I have said it before. They use artificial intelligence to offer quick and accurate policy quotes and approved claims. They have a solid business growing at an exponential rate year over year. They are easily digitizing insurance, trying to replace agents with AI, chatbots, and artificial intelligence. They collect data in a way that agent-based insurance companies cannot match, and Lemonade gathers nearly 100 times more data points per customer, which is incredible because that is what is going to help them continue growing as they learn more about their customers' behavior to be able to offer to them exactly what they need or what they're looking for. I'm already on the waiting list for their car insurance here in Florida, and will for sure let you guys know when I'm able to subscribe and explain how their service works. If you want to know more about Lemonade, I have plenty of videos, or go to the Motley Fool. They literally post a single article almost weekly or monthly on Lemonade on why it is a good stock to invest on or why they're investing in it. I don't invest on this company because of what they're saying, because they also post articles against my investments, like it happened with Wish over the weekend. But it is good to read and understand what others are thinking or saying about your company that you are investing on. Right now, I'm up about 78% in my position, as I have an average cost of $56, almost $57 per share. And as you can see, it is not a huge position, but it is perfect for me now. It represents 5% of my portfolio. I used to represent more, but it decreased, not because of me selling, because I have not, but because I have been heavily investing in Wish and Fubo, which both represent about 16 to 18% of my portfolio. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps the channel out. Thank you and see you next time.